You know, when you see a company change its name and its stock ticker, and you kind of wonder, what's really going on there? Is it just some fancy marketing, or is it a sign of something much, much bigger? Well, today we're digging into Corpay, which you might have known as FleetCor. And from an investor's point of view, this is way more than just a name change. It's a massive transformation we absolutely need to get our heads around. So let's kick things off with this quote from the CEO, Ron Clark, back in March 2024. Now, this wasn't just some fluffy corporate speak. Nope. This was basically the company's public declaration of a huge pivot they'd been working on for years. They were ditching that old fleet identity to really embrace where all their growth, their money, and their future is headed, the absolutely massive world of B2B fintech. All right, so here's how we're going to break it all down. First, we'll cover the pivot itself, what's actually changing. Then we'll get into the real debate, the bull case versus the bear case. After that, we'll do a quick financial health check, and we'll wrap it all up with a super clear checklist of what you should be watching going forward. First up, let's talk about this strategic pivot. See, the name FleetCor was starting to become a problem. It really tied them to their original business of fuel cards for vehicle fleets. But in reality, the company had already shifted gears in a big way. They needed a new name, a new identity that actually matched their ambition to be this big, diversified B2B payments powerhouse. And boom, this chart shows you what's really going on under the hood. While vehicle payments is still the biggest piece of the pie, just look at corporate payments. It's already more than a third of the entire business, and it's growing way, way faster. This isn't a fleet company with a little side project anymore. This is a business with two very powerful and very different engines. So what's the optimistic view? What's the story that gets investors excited? That brings us right to our second section, the bull case. This is all about the incredible power of that new growth engine and the financial muscle that's fueling it. This number right here, 18%. This is the beating heart of the bull case. That's the organic growth rate in their corporate payments division. This is the high-speed fintech story that investors are betting on. I mean, it's expanding 2, even 3 times faster than the legacy business, and it's a huge flashing sign pointing to where this company is going. But here's the thing. The bull case isn't just about the new, shiny thing. The old foundation is actually incredibly strong. That so-called mature vehicle payments business, it's actually speeding up, hitting 9% growth. That gives them this super stable, profitable, and growing base that supports everything else they're doing. And what's powering this whole machine? Cash. Lots and lots of cash. Corpay is an absolute free cash flow machine, cranking out well over $1.5 billion every year. This creates what you could call a self-funding flywheel. It gives them all the capital they need to buy back stock and go hunting for strategic acquisitions to fuel even more growth. Okay, so let's put it all together. The bull case really boils down to these key points. You've got that high-growth payments engine, a business model that just gushes cash, a really smart M&A strategy, ridiculously high profit margins, and hey, customers are sticking around. It's a pretty powerful mix. But of course, no investment is a slam dunk. We have to look at the other side of the coin. So let's get into section 3, the bear case. What are the potential pitfalls and the big risks that could derail this whole growth story? This slide just perfectly illustrates the internal tug-of-war going on. On one side, you have corporate payments just crushing it. But on the other, that smaller lodging segment is actually shrinking. Management has even admitted it's a drag on the overall results, and they might even sell it, which, adds a layer of uncertainty. And this brings us to a really critical question the bears are asking. Corpay's strategy is all about growth through acquisition, and they're super aggressive about it. But when you're swallowing so many big companies at once, you have to wonder, is there a risk of M&A indigestion? Trying to integrate all these new pieces smoothly is a huge, huge execution risk. And on top of that, you have the external stuff. The business is sensitive to big economic shifts. Think fuel prices, currency exchange rates, interest rates. Competition is absolutely fierce in every single one of their markets. And then there's this ongoing lawsuit with the FTC about their fee practices, which is a legal and financial cloud hanging over the company. Okay, so we've heard the bull case, and we've heard the bear case. Now for section 4, let's do a financial health check. Let's ground all this talk in the actual hard numbers and see what the 5-year trend really tells us. These numbers really tell a story of incredible consistency. Just follow that total revenue line. It's been climbing steadily year after year. Now look over at the gross margin. Rock solid, consistently in the high 70s. That signals some serious pricing power. And when you look at net income and free cash flow, the takeaway is pretty clear. This is a durable, highly profitable business that generates a ton of cash. So, after all that, where does it leave us? Well, in our final section, let's put together a little checklist of what you should be watching. Think of this as your cheat sheet for figuring out whether the bulls or the bears are winning this argument in the real world. So if you're keeping tabs on Corpay, your focus should really be on the answers to these 5 questions. Number 1, is that corporate payments growth still in the high teens? 2, are customers sticking around? 3, how is that massive Alpha Group acquisition integration actually going? 4, is the big partnership with MasterCard delivering that international growth they promised? And finally, what are they going to do about that underperforming lodging business? The answers to these questions will tell you everything you need to know. And that really brings us to the single biggest question for any investor looking at this stock today. The company has already changed its business, but has the market's perception, and more importantly, the stock's price, fully caught up to that new reality? The answer to that question will probably determine everything about its future as an investment.